Hey everybody, welcome back to Sniper Gains. On this channel, we provide you with the best tips and tools to help you become a better profitable trader. Now, in this week's episode, I'm going to show you how I lost over $10,000 trading options. Now, I'm going to show you the 6 critical mistakes that I made that caused me to lose that 10 grand and the steps I'm going to be taking in order to recover those losses. With that being said, let's begin. So we're going to first take a look at my first account, which is the Robinhood account. When I'm looking at the account right now, if I go to the all-time button, you will see that I've lost over 96.6%. This means that I've lost around $8,281.75. So that's account number one. Now in my second account, account number two, which is Webull, I'm going to take a look at that. I've lost over 200 or 2000 I've lost over $2,231.69. So these are when we combine it together, that's more than $10,000 lost trading options. So you might be wondering, how on earth did I lose so much money? So here's the first critical mistake. When it comes to doing this, I used to do what's called strategy hopping. Now, in strategy hopping, the idea is that I would go on YouTube, right? I'm seeing all these crazy new strategies, ICT, supply demand zones, and I'm trying them all. Now, here's the disclaimer. All of these trading strategies actually work. But the problem with strategy hopping that I was experiencing is I'll try out a strategy for just like a little bit. And then if I started to lose, I kept switching up. I'll try a strategy for a little while, kept switching up. I kept repeating this process for quite some time from around May 17th, 2021, all the way to around September 6th, 2021. At that time, I was just trying every strategy in the book. Now, I'm not against a person trying to find a strategy. You actually do need to have a strategy in order to become successful at trading. But the thing about it is, whenever a person is strategy hopping like I did, they were lacking conviction that the strategy actually works. And because I was so fixated on making money now, as soon as I was handed a loss, I felt like, no, maybe the strategy does not work. Let me keep switching. Let me keep switching. Let me keep switching. And that is a trap. So if you're in a similar situation where you're starting off and you feel like you have to keep changing strategies, don't fall for that trap because every strategy works. Whether you trade supply and demand, whether you trade support and resistance, whether you trade ICT, whether you trade trend lines, they all work. Now you might be wondering why. These strategies all capitalize on a certain repeatable pattern that the market will exhibit over time. So that's the key thing. Just know that it works. If I had known that, I would have been more focused on sticking to a strategy and not wavering as soon as I was handed a loss. So that was my first critical mistake. Now, my second critical mistake is I signed up for trading signals. Now, this is not a shot at anyone who has a Discord channel, but the allure of having a Discord trading group is that in my situation, when I saw I was losing so much money, I was thinking to myself, hey, if I could just simply replicate the trades of a profitable trader, I should be profitable, right? It makes common sense. But that is the second trap. And here's why. Whenever you are in a trading signal and you're blindly, and that's the key word, blindly just following signals, buying and selling without understanding why you're pressing that button, then you are going to be subject to losing a lot of money. And here's why. Number one, as soon as the trade is started, typically you're going to go into drawdown. So let's just say if you were trading options, right? A person says, I want you to buy a call on Apple. As soon as you buy that call, because of volatility, it will typically probably go down a little bit into drawdown before pushing up. If you're a person who is so fixated on not losing money and you start to see a loss, you will start to lack conviction. And that's the key word. A person might say that they have an 80% win rate, but they have conviction behind their trading. You, or in case me, I did not have that conviction because I was just trusting that whatever they're saying would work out. So it caused me to sometimes panic sell and just, exit a trade because I couldn't handle the idea of losing even more money. That was a major flaw when I was joining Discord groups. The second is the win rate. A lot of popular Discord groups claim that they have, a 70 to an 80% win rate, which can actually be true. But because they still have a 70 to 80% win rate does not mean that you will be able to achieve that result. And here's why. One of the most practical reasons is that, like in my situation, I was typically at work whenever they're sending out these signals because when it comes to the equities market, it typically opens up at 9:30 and then closes at 4. Usually at that time I'm at work. So I've always been in sales my entire life. So whenever I'm trying to sell to a customer, it was very hard to sell to the customer and still be thinking about my trade at the same time because I didn't want to get distracted. So what that would result into is that I would sometimes miss very important trades that really would help to make my account much more profitable. But there are times that I would enter a trade that ended up being a loser. You see, in order to achieve the same exact win rate that I was seeing in the Discord channels, I would have to be able to trade every single signal. And because I was at work, there was no way I could be able to follow every single signal that's being sent out. The third problem that I've noticed with trading Discord groups is that it doesn't really teach you how to develop good risk management. Here's an example. Let's just say the person who's running the Discord channel has a balance of about, let's say, $10,000, right? Okay. And he decides to buy a contract, let's say maybe a Tesla contract of about $500. So because he has over $10,000 in his account, he's only risking about 5% of his account. However, if you are starting off like I didn't necessarily have 10 grand to spend at the beginning. That loss that you're seeing was an accumulation of me taking my paycheck and putting into my trading account over time. But when I started off, I didn't have 10 grand, right? I didn't have 10 grand on me. So whenever I would see a signal saying, hey, I want you to buy this call contract for Tesla, even if it's profitable, right? It would be a huge chunk of my account. So typically at that time I had about I would say maybe 2,000 to trade with. So essentially taking a $500 contract, it's risking 25% of my entire account on one trade. So you see, that is the big downfall of just blindly following trading signals because you're not accounting for drawdown, you're not accounting for human error, and you're not accounting for the fact that when you're risking 25% of your account, your emotions get very, very high because in the back of your mind, you only have 4 shots until you completely wipe out your account. So those are the major reasons why I soon discovered that following trading signals is basically a trap because number one, you're not going to practice good risk management. Number two, the sheer amount of time required to follow all the signals can be very hard to do, especially if you have a 9 to 5 job. And number three, you are taking trades without understanding the strategy behind it. This is the reasons why I believe that following trading signals blindly in Discord channels is not good for you as a trader. The third mistake that I made is from around June 11th, 2022 to about December 18th, 2023. At this time, you will notice that I was very, very, very desperate. At this time, I felt very, very desperate that I was willing to do anything to even get back to break even. This caused me to get tempted to fall into the YOLO trades. One popular YOLO trade that I used to take a lot was just to play earnings. So let's just say if it was something like Tesla or something like Nvidia, I would essentially buy a very far out of the money contract with the hope, let's say if it was a call. So I would buy a out of the money call contract that was very far away with the hope that maybe it would spike up with some good because of a good earnings report. When I did do those kind of plays, I barely made any money and I used to wipe out my account so much because of desperation. I started to forego following a strategy and just straight out gambling, just gambling my money away with the hope that I could somehow get to break even. This happens whenever a person is not following a strategy, and that's one of the biggest mistake that I made in my journey is I allowed a losing streak to become even greater by adding YOLO trades into the mix. So if you're in a situation where you're in a huge drawdown, the worst thing you can do is try to YOLO your way back to break even. It is also another death trap. So don't do that. Instead, if you're noticing you're on a losing streak, either reduce the amount that you're spending per trade, or better yet, take a pause off the live trading account and then switch over to just doing some paper trading so that way you can kind of see what you need to adjust with your strategy. That is one of the most practical things that you can do. All right. The fourth mistake that I made is that I used to revenge trade. So after my journey of doing a lot of YOLO trades from July or from June 11th, 2022 to about December 18th, 2023, is that I used to take a lot of revenge trades. So with the revenge trade, it's this mentality: I can't allow the market to beat me. I can't allow the market to beat me. I need to avenge my loss. The problem with not being able to accept a loss is that you can easily fall into the death trap of going on tilt. And unfortunately, that happened to me. If you take a look at the my chart right here, so past December 18th, 2023, I did have a little bit of a winning streak, but then I completely lost it all and I started to revenge trade and revenge trade and revenge trade and revenge trade. And that's when it really started to completely kill my account after losing 73%. All risk management completely went off. I was just saying, no, I gotta get this money back. I have to get back to break even. So, if there was a lesson that I can learn from this, when it comes to revenge trading, never fall into the trap of thinking that you need to avenge your loss. Don't do that. What you want to do, if I could go back in time and talk to my younger self, is that in any trading strategy, it will always have losses. But the best thing that you can do is learning how to mitigate those losses and really push your winners by practicing good risk management and by knowing the appropriate time to scale in. So, those are the things that I wish I did, but at that time, I didn't do it. So, that was my fourth biggest mistake. My fifth biggest mistake, which is going to be very controversial, is that I started trading a live account without validating and proving that it works on a paper trading account. Now, online, a lot of people say paper trading is useless because it does not give you the emotional impact of trading with real capital, which is very much true. However, what I will say is this: if you were to trade on paper, what it builds is conviction. You'd rather have conviction first and then learn how to emotionally handle large sums of capital, because you can always start off with a little bit of small cash, just something that does not emotionally move you. but you'd rather have that conviction of knowing I've actually put this strategy to the test. I've taken over 100 trades using this strategy or playbook, and it has worked. That is the correct way of approaching it. Because I know on YouTube, a lot of people will say paper trading is useless. It doesn't matter. You got to trade live in the market. That is not true. Paper trading matters for one thing and one thing only, to validate your setup or your playbook to see that it actually works over a long period of trades. Because if you don't have that conviction, you will fall into a few traps. You will either fall into the trap of strategy hopping, you will either fall into the trap of following Discord channels, you will either fall into the trap of revenge trading, Yolo trading, because you do not have that conviction. However, if you start off paper trading, that way you'll be able to start to see and believe that your setup works. Because when you have that conviction of knowing that it works over a large period of trades, you will have a much better chance than a person who's very emotional and wondering if it's going to work or not, because you have the data. That data is the key that you need in order to become successful long term. So that was my biggest mistake, is not starting with a paper trading account. And the second one right after that, or the mistake number six, is not journaling my trades. So in the beginning, I used to just trade, but I never actually recorded what I was trading, how the setup performed, and the lessons that I learned from that particular setup. I didn't value this until I learned it from Umar Ashraf, that it is very important to journal your trades, because like in a business, right, you have QuickBooks, you have to keep track of your expenses, you have to keep track of your performance, your metrics, right? In the same way, the TradeZella platform, this is not sponsored by the way, I mean, I do have, like an affiliate link in the description for that, but being able to journal that trade is going to give you the data that you need to make certain tweaks that can improve your edge. At that time, I did not understand that importance of journaling every single trade, because that data is what will give you an edge over everybody else. You know exactly what to trade, you know exactly what conditions need to be met for you to execute, because you have the data. If I could go back in time, I wish I started journaling. But now, as I've learned, I'm starting to journal now, right? You have to learn some of these lessons so that way you can become a better trader in the future. Now, this is a nice segue to what I'm going to be doing now. I've talked about my mistakes. So, what is my recovery path to recover the money that I've lost trading options? Step number one, you may have noticed I've been on a large hiatus from trading on a live account. The reason why is I'm actively working on my paper trading account. So, let me kind of show you what it looks like. I'm going to go to my TradeZella, and then I'm going to log in. Okay, so in my TradeZella, you will see that I have a few accounts that I've set up. On this Webull paper trading account, what it is it's supposed to simulate what it's like to trading options on an actual option trading account. I love the Webull paper trading feature because it helps you to kind of see how you can be performing with your options before you go live. Now, I had started a budget or a balance of 5,000, and my goal is to try to reach 20,000, only taking day trades. In my journey so far since May 19th, 2024 to now, which is about August 4th, 2024, you will see that at some point I was starting to make money, kind of had some dips going up, 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 and then eventually I started to go on tilt and I lost it all again. However, right now I've started to climb back the mountain. So by doing this, I'm starting to notice that, hey, I need to kind of tighten up when I am starting to making a lot of money, not to go on tilt and be consistent. So this is kind of showing me a lot. It shows that right now I have a trading win of 38%, which is not good. I ideally want to bump that up to about 70%. So with this program, you can be able to record all your trades. So you can go here to trades, and then you can be able to record all the trades that you've done. So let's just say if I felt like I needed to add a trade that I did this week, I can be able to choose whether it's a stock, options, futures, options, crypto, forex, all of that. You record it, and when you record it, you can be able to journal. So let me kind of show you one of my trades that I recently had. This was a pretty good one. So over here, I have like my own journaling template. So I always like to start off with a picture, kind of to show what it is. So this is, for example, was a short on Tesla. So I took a short and then I exited over here. Now, in this journal, I'm writing my rules because every person's trading journey is going to be a little bit different. This is just my style. You can always do it your way, right? But I always like to write down the rules and have a little bit of a description that shows how it's applying to that rule. And if I'm not following the rule, I still need to write it down so I can kind of keep track of these metrics. Okay. And then over here, I always like to write like the bonus confluence. Basically, what that means is I'm just trying to figure out what other factors may have aided my setup to perform well. And then towards the end, I always like to write my thoughts on the trade setup. This will help me to see or reflect on what I liked about the trade or what I didn't like about the trade. So I'm basically repeating this process with the goal of getting my options trading account from 5,000 to 20,000 on a virtual account, because when you're able to 4x an account, whatever strategy you're using works. The only time that it wouldn't work is if you allow your emotions to get the best of you. So because I've already, I hate to say this, I feel somewhat numb to losing, because when you lose, you kind of, you just don't care anymore, which is good and bad. I'm able to now regulate my emotions a little bit more just because I've lost a lot of money from it. So I'm kind of used to dealing with the pain of a loss, right? But by doing this strategy, by going in here and making those tweaks, I will be able to eventually get to that 20,000, even if it's on paper, and have that conviction of knowing, okay, now that I know what setup to work on, I'm going to bank on that setup and find a way to get back into my option trading account, run it up again, and finally, break that losing streak that I've had for about, I would say, maybe 4 years. So that's where I'm currently at in my journey. Let's see here. And yeah, I don't know if you guys are dealing with the same thing too. If you are, hey, let me know. And let me know what you think about this video. What points do you agree with? What points you don't agree with? Let me know in the comment box below. And with that said, can't wait to see you on the next video. Peace.